Hey everybody, what's going on? Welcome back to Crypto Kings. It's Matt, and in today's video, I'm going to be going over exactly what's been going on with Shiba Inu. I've had a lot of questions about whether or not it's being bullish or bearish. We're going to cover it all today in this video. So if you guys are new, make sure to drop a like and subscribe for more daily Shiba Inu videos. Let's get right into it, folks. So if you guys have not already seen what we are working with here, essentially we are on yet again another red day. You guys can see a down 6% here, down to 65 with a market cap of $35 billion. Which is still incredible. I mean, compared to the rest of what we're working with here on CoinMarketCap, the fact that we're sitting here at $35 billion is absolutely bonkers. The volume has been staying kind of the same, but still not nearly as high as it was a couple of days ago, with around 8.5 billion volume in 24 hours. Now, when it comes down to it, there's been a lot of discussion about whether or not this movement is something we could really classify, because there are a few different ways you could sort of classify this. Because first off, we have an option to say this is just kind of like a symmetrical wedge where it comes in from the top, comes in from the bottom, and this is ready for a breakout. The problem with this is that it's not really doing what a symmetrical sort of wedge should be doing, and that is hitting the bottom and the top every time. So top, bottom, something more like this. We want stronger highs and stronger lows in a situation like this, and we're not seeing it. So what that indicates is that it is a little weak here, it is a little weak here, it is a little weak in certain locations that would solidify a symmetrical wedge as being the proper thing to classify this as. You, of course, could draw any other kind of wedge. You could say like an ascending wedge if you wanted to, and kind of get the same thing going, but every time you enter the same issue, my goodness, this isn't really doing what it needs to do. It's not really filling out this wedge as well as it should be. So what does this mean? It essentially means we're stuck between a bunch of different classifications. Now, an issue that we encountered last night on my stream, and if you guys don't, you guys should definitely come watch some of the streams. I stream around 11 p.m. Midnight, area Eastern time, so you guys definitely come check them out. But you guys can see the issue here is that this top kind of rounds, and a few people were discussing this in my chat, and it really is worth looking at. When you have a rounded top like this, it typically does not mean a very good thing, and I did a little bit of homework on this because I really was intrigued on this idea. But essentially, the idea, of course, is that this is an upside down U, which this definitely is, and of course they are found at the end of extended upward trends and may signify a reversal in long-term price movements. That's pretty bearish. That's pretty bad. Now, when you scroll to the bottom here, they say the rounding top is not infallible, so, it doesn't really mean everything. It's not the be-all, end-all, but it is a technical pattern suggesting that investors are weakening their reserve to hold and may begin selling. So that is kind of the issue with this symbol here. Now, again, this is not the be-all, end-all, and when it comes down to it, I made a prediction on my stream in the past few videos that has thankfully come true extremely accurately, and it is nice to see. So it looks like in just about every instance, right around 60 is a line of support. No matter what happens, it seems as if it bounces off the 60 line. You guys can see at very fleeting moments, is it dipping below that? Now, this is pretty great because, like a lot of people have been talking about, oh, is it the right time? Should I ape in at 70? In my opinion, it is going to head back down to 60, definitely again in the future. And I've been saying that for the past few days. And so far, 1, 2, 3 times that has happened, almost 4. So it is very safe to say that that was an accurate prediction, which is awesome to see. Because again, guys, what we're working with here is a very, not just, sort of speculative asset right now, but the fact that, of course, it is extremely oversaturated. There are a lot of people who are buying this, and again, that few days ago was insane for buy volume. It just was. And the best thing we could do is to try to be as safe as possible and to dollar cost average our way down to make sure that we are buying at the cheapest price possible to prevent us from being left holding the bag at 88, because that would be very bad. So ideally, we want to make sure we are re-entering SHIB. Even if we are looking to reacquire it, we want to make sure we're re-entering it at a time and price that, makes sense to us, at a time and price that is not, obscene and ridiculously high. So we have this rounding here, which again is not good, but we also do have the potential to see some kind of wedge formation like this that is inherently bullish. It really just comes down to how you read it, and that's kind of the issue. A lot of times any asset like this will not follow a sort of wedge specifically like that, and that's kind of an issue because this isn't cut and dry. This is not clockwork. This cannot be officially classified in any way, shape, or form. Now, another thing that's worth looking at is the flagpole here, which a few people in my chat also mentioned, which you guys can see. This spike here shows, a lot of volume and a lot of volatility, and shows that this crash was a little bit too quick, because you guys can see when you have a flag like that, ideally, you want to kind of see something like this and then get ready for another breakout. This is what that flag should do. Unfortunately, this rounding makes it a little bit tough, and just some inconsistencies in the price makes that a little bit difficult. But the flag is still a good sign. Now, when we check the relative strength index, you guys can see, of course, that we are working with, just a drastic, exceedingly high amount of volume here, which then kind of goes down into, somewhat of the mid-range, which right now, at a certain point, heads to the very low range, almost being oversold. So every time we work into the low 60s or below 60, even for like a split second, it will be considered to be oversold or very close to being oversold. This is kind of good because we do have an opportunity to buy in at these instances. So this is not particularly bad. It is showing that we have a lot of headroom in a lot of ways, to work our way up on the way back. So that is definitely not bad. When we take a look at the Fibonacci retracement, you guys can see, of course, this is going to outline some potential lines of support and resistance based off of some previous patterns based on the most recent run. So you guys can see the very top of that run was around 78, and then the very bottom here of what has been charted is around 61. So what this is essentially giving us is just some information about where these candles are sort of fitting in on these lines. You guys can see the 23.6% line seems to be kind of contested. It looks as if it was an area of support for a little bit, which unfortunately fell through. So this spot here is particularly not good because as an area of support, it did not succeed. It did not succeed at holding up these candles above 65. So like we talked about in the previous video, while it was possible that 65 could have been the new line of support, it looks as if it fell through, which is very unfortunate. So now we're headed back, and it looks as if we are going to retest whether or not the 23.6% line has any shot of being a line of support. So when it comes down to it, 65 may very well be our line of support in the future. It just depends whether or not this line is able to hold out. When we check the MACD, which you guys can see, of course, here on screen, it is giving us a very slight sort of buy signal, but not anything that is major or worth really considering. Again, we just went through a long period of red, so it is finally giving us just a little bit of green, but that really doesn't say that much for the long term because it really just started. So we do have the potential, of course, to swoop above again, but it does make it a little bit tough considering it is not giving us an overwhelmingly green light on purchasing this. So that being said, that is that. I hope you all have enjoyed. Remember, I'm not a financial advisor, just my personal opinions shared in these videos. I really do appreciate you guys watching. If you guys have not already, make sure to join the Discord. Link in the description. Would love to have you guys over there and talk to you all over there. Really do appreciate it. With that being said, guys, my name is Matt. I'll see you guys on the next one. Peace.